Today's presentation, we're focusing on real estate, um, and we brought on Bill Allen. Bill's can join us here in just a second, and Bill is the owner of Blackjack Real Estate, and kind of here's a little bit of his bio. Um, he's a Navy pilot. He began real estate investing back in 2007 when he initially got deployed and had a house that he owned and he was looking to, at that point, then rent out. He began also flipping properties, really focused more so on that in order to build the capital. His goal originally was to buy long-term rental properties, but you need capital in order to do that, and found that he could get some quick capital by flipping properties. And to this day, has flipped or wholesaled over 500 houses. He's also the owner and CEO of House Flipping HQ, and runs a mastermind group as well. So at this time, I'll bring Bill on board. Bill, are you there?
Yeah, I'm here, Scott. Thanks.
Right,
Thanks
great.
for the great intro and having me.
Yeah, and
Yeah,
if
appreciate it.
you have anything else you want to add to your bio, please go ahead. And again, I'd encourage anyone as we go through the slides, and we have Bill on board today. Any questions, please just pop them up in the question box, and we'll make sure that we get to them.
Yeah, I know that I'm not on video. Usually when I do this, I am. So there's a picture of me and my wife, and there's our three kids. My son Will is 5 now. This is about a year old. My son James is 2.5, and our baby Lucas is a year and a half. So 3 little boys running around the house, and I get to be home all the time, run a real estate business full time. I also, am run a lot of my IRAs and my lenders' IRAs through Advana. So the reason I'm here is as a client of them too. So they've done fantastic things for me. So I appreciate everything you do for me, Scott, and for having me on the call.
Yeah, thanks, Bill. Appreciate it. And I know kind of one of the things we're going to talk about as we go through today. You mentioned, being at home and being able to be around them. Part of what drove you into being in real estate and doing this is being able to get yourself somewhat financially free and put people in places. And we'll talk about setting up a team later that enables you to free up your time and have put the right people in place to kind of help run those real estate investments.
Yeah, absolutely. That was the most important thing for me, was like time and financial freedom. So really, being a Navy pilot and moving around for 15 years, being deployed, doing all that stuff. Once I got married and started settling down, it was time to really start thinking about my future. And I've always invested in my IRAs and 401ks in the past. And then when I really started to learn about real estate, I found that I could make really great returns inside of there, and moved a lot of my money out of the stock market and over into real estate. So I can talk about some of that stuff too. Saving money has been, I've had an IRA since I was about 15 years old, when I could only put $2,000 a year into it. So, yeah, that's kind of my background of saving, investing, and things like that too. So we can talk about real estate and kind of dig into any of those things that some of the listeners want to talk about as far as why I did things and how I did it. So.
Okay. Well, maybe let's start off, because I guess when you're
Yeah.
looking at buying real estate, you got to find something to buy from somebody else, generally speaking, or whether you're buying a lot, you're buying a rental property, even a rehab. So maybe I'll kind of go over here, kind of your approach to marketing, directly to sellers was one of the bullet points you said you wanted to address. So, like I said, I'll turn it over a little bit to you. I'll kind of chime in with some questions. And again, if you're listening to the webinar today, please type your questions into the question box. I'll make sure to get those to Bill as we go along. But, Bill, maybe tell us a little bit, kind of your thoughts on marketing directly to sellers, how you do it, and kind of what resources you use to do this.
Yeah, absolutely. I think we're in a time now of most of the people that come to me in, kind of in like the coaching world. It's really competitive out there, and we see it too in all the markets that I'm in. Really competitive. So it used to be a time where you could pick up short sales, foreclosures, things like that, houses on the MLS. And I feel like over the past few years, we've really had to move more to going directly to the seller and start marketing in a different kind of environment. So what we do in my company is we market directly to seller. We use lots of different marketing channels, anywhere from some of the things that people are doing right now is a lot of direct mail. So postcards, letters, things like that. Online advertising, pay-per-click, Google AdWords, Facebook marketing. A lot of people are doing some cold calling, lots of different marketing channels available. Bandit signs, people will put out signs in there. You've probably seen them driving around your city, like "We Buy Houses" type signs. Any type of, you might have sit down at a diner ad and seen a "We Buy Houses" ad on the placemat at a diner or something like that. So TV, radio, billboards, you've probably seen it all of what we're doing. Really, I feel like we focus in my company really on that probably 5% of the real estate market, maybe 10% of the real estate market that's looking for something quick. So most of the people can talk to a realtor and sell through a realtor, and their house is in good condition and they don't need a lot of help, or they don't need money really fast. They can wait 30 to 60 to 90 days for their house to sell. But in what we're doing, we're really looking for houses that need work, or people that are really in a situation where we can help them. So really the whole goal here is trying to add value to the marketplace and the seller, to really find out what they need. We're not telling them not to use a realtor or anything like that. We just go into this, send mail. 80% of my deals come from direct mail in my 3 cities. So this is what I know really, really well. The rest of it pretty much comes from online advertising. We don't do cold calling or cold texting or ringless voicemails or things like that, or put out a lot of bandit signs. We really direct mail and online advertising, and kind of word of mouth, looking for referrals, working with realtors and things like that. So my goal is to figure out how to find as many properties as I can, and then decide what to do with them, which we'll talk about here in a couple slides forward. But we talked about kind of the different marketing channels. For me, it was about figuring out how to control the deal flow, because I was going to other people, other wholesalers, people that would, and wholesaling is kind of, people will market, they'll find a house, put it under contract, and then sell the contract to an end buyer. So I would go there looking for houses to flip, and I was reliant on their company. So instead, I wanted to build a company that provided a steady flow of deals for me, because that really is the thing, is if you can control the deal flow, then you can really control your outcome in the marketplace for the flips that you want to do and how you're going to monetize those deals.
Yeah, Bill, if I can interrupt for a quick question. We talk about, you said direct mail has been very successful to you. How are you? I mean, is there maybe go a little bit deeper if that's been very successful? Is it, number one, how do you find the list, or how do you identify the list of people to direct mail to? I mean, do you get that from a certain place, or research a certain area? And then second, do you find that you have to do, how many different mailings to the same group of people do you need to do before you start getting some bites? Is there a certain number, like, hey, you need to mail at least 3 pieces to the same group of people before you're going to start seeing a return? Maybe go in a little more detail there.
Sure. So like how we do this is, what I do is I use a company called ListSource. It's provided by the core company. The owner of the main company is called CoreLogic, and they have data. So I buy data. So I'll buy, basically they'll data mine different sites and things like that to get mailing addresses and addresses. It's all public record information, and I'll buy them I'll buy the leads effectively. So, and then I'll take that list. So the way that I look at things, I kind of break it down to go in a little more detail. Is I'm looking in areas where there's distress, whether it's distressed homes or distressed people, like things that they need help. They're looking for us. They don't know where to turn. They need to sell their house because something's going on in their life. So my message on that marketing piece needs to speak to them at the time that they open the mailbox, right? So the way I look at it is I look at the market, and if I'm going to go into a new city, where is that distress type properties? So I live in Nashville, Tennessee, and there's a city there called Brentwood, Tennessee. Brentwood, Tennessee is where all the country music singers live, the athletes, $1 million homes. It's a very, very rich area in where I live. I don't market to that area just because those are not the target clients that I'm looking for on the front end. I'm looking for somewhere where there's a little bit higher foreclosure rate. There's more distress. There's people who kind of have moved in and out of jobs, and they might need our service. So that's the first step that I do, is kind of identifying the marketplace and seeing, like, where's the supply. And then on the back end, if I'm going to be a wholesaler, I'm going to look at kind of where the demand is. Even a flipper, I'm going to look at the demand. So how long are houses sitting on the market on the back end? How quickly do they sell? So that's kind of how I'll start targeting. If you're a flipper, you're going to know the zip codes and areas that you like to do houses in. They provide the biggest return for you. So from there, then we send out the mail. And as far as direct mail goes, we'll get response on the first mailer. Usually it's a little higher. It's on a new list. It's a take me off your list. So there's a lot more opt-outs than later on down the line. But I'd say, like, the best leads that we get are after 3, 4, 5 touches. So there'll be some of those where you'll get them right away on the first mailer. They'll see it, they'll call you, and they'll be ready to sell. Other times, what I feel like is we're kind of building brand awareness. We want to get in front of them over and over and over again. So it's up to me to determine how many times can I get in front of these people without breaking the bank. I mean, if I could send them a card every week, I would. but it just doesn't make a lot of sense. So I'm constantly adjusting that and looking at my numbers to see, if I'm mailing them, every month, what does it do? So I used to mail every other month for about 2 years. And then I said, well, I'm going to try to mail every month and I'm going to look and I'm going to spend twice as much money. So let's see kind of how the numbers play out. And I just look at every dollar I spend, how much do I make in return? Just like a regular business, right? So what I found, Scott, is probably around, I'll just keep mailing. So 5 or 6, that's really where people start, the deals start coming, and you got to be following up with them in the meantime. But there's those people that will get your card and get your card and get your card and eventually call you. So I want to be in
Okay.
front of them when the time is right. It's really kind of like, how do they feel when they open the mailbox? So when
Sure.
if you're feeling good and nothing's wrong, you're going to look at it and throw it in the recycling bin. If you got you didn't sleep the night before because you got a bunch of medical bills that need to be paid and creditors come in and your house is the asset and this is what you want to do, or the house is falling apart, you don't want to fix it up, and you just want to move fast, then they feel that way. They open the mailbox, pull out the card, and give us a call. So
Okay, yeah, and I guess to follow up on that, then we'll kind of move on to the next topic. But I had a question come in. Individual asked, I know that from you talking with you as well, you're starting to get into the multifamily space a little bit.
yeah,
Are you finding success with direct mail marketing to those on those types of properties, or do you approach those in a different manner?
yeah, it's a little bit different. It kind of depends. I'm looking at the question here too. It says I'm not talking about 20 units, but maybe 8 to 10. So the bigger multifamily, you're going to come into a lot of. To answer your question, yes, we do mail to them. We definitely mail to all the 1 to 4 units, and then bigger units like under 10, under 20, smaller. There's not a lot of players in that market. The big institutional investors are going up after the big ones. Hundreds of units, thousands of units. So what we do is we try to live in that niche that you're talking about, kind of in that smaller multifamily niche. And they're usually mom and pop sellers that are you could probably get in front of. You don't have to get past the secretary or mail it to a business that the owner doesn't actually see it. The whole goal of the stuff is to get it in front of the decision maker. So I think you can be successful with direct mail for sure in some of these smaller units, and then with the bigger ones, it might be through a broker, really kind of tracking down the owner and knocking the door or trying to set up a meeting, things like that. But absolutely, I think the smaller multifamilies are set up well for that, especially under 20 units, to do some direct mail too. And I even I was looking for a lot on the beach to build a vacation house. And I just wrote a little handwritten letter I pulled like 10 vacant lots, wrote a handwritten letter, and 6 people called me. So, I mean, the response rate of things like that are insane. We have about 0.9% response rate from our direct mail marketing, our big list. So we get about 200 calls a week. But the response rate's really low from big bulk direct mail. These smaller targeted things to smaller multifamilies, I think you'd get a really good response if you can get it in front of the right people.
Okay, so now thanks for sharing that. And so now you've sent out the direct mail, you're starting to get calls, and now you're actually in discussions with somebody who owns a property. So now you're talking to the seller. So let's, I guess, kind of switch gears a little bit. So kind of next step in the process now is really negotiating the deal. You got them on the phone and you're talking to them. What kind of tactics do you use? And when you're buying these houses directly from a seller, how do you approach that whole process?
Yeah, so typically they'll call in or fill out something on our website, and we'll call them. And so the first step is kind of come into our database will be somebody to answer the phone. So we have somebody who answers the phone and does a little bit some questions with them. We just have it's not necessarily a script, but it's just kind of a list of things that I want them to get. And really, it's just tell me your story. We're friendly. We want to talk to you. Tell us what's going on. So I want them to find out kind of the motivation of what's behind the sale. Is somebody motivated to sell? What's their timeline? Why are they selling? And then just kind of keep digging deeper until you hit the bottom. And so asking kind of probing questions like why, how does that make you feel? What's going on? And relate to them and build some rapport in the beginning, so they feel like they can trust us. I think people do business with people they know, like, and trust in any business. So that's kind of the first step in our process. They give us a call. We talk them through a little bit, ask them what they think the house is worth, what kind of work it needs, tell us a little bit about it. And then we set up an appointment to go out and look at it. And from there, one of our house buyers will go out and just sit down and talk with them. Hey, tell me a little bit about this house. Why would you want to sell a great house like this? Why not rent it out? Why not sell it with a realtor? Just kind of find out what's going on, look around it, take some pictures. And we treat it more like a consultative approach when we go in. So they shouldn't feel like they have to sell to us. We're an option. We also have a ton of resources of people that we can link them up with and help them. And it's about finding out if their needs match what we can deliver and provide for them, then we're going to do business together. If not, we're going to point them in the right direction for the best thing for them in their life. So, who we are and our integrity is really important to me. So it's not a hard sell on the hood of the car. It's more of a consultative approach. Why aren't you selling this on the MLS? Tell me what's going on with your situation. And I think really when you get down to the meat of that problem, you've got to figure out how to help them solve their problem. And if you can get to that point, then it's not about the house or the equity or the money. They know that they're trading equity for speed of sale and ease of transaction in this case. And we're not hiding that. We're a business where we need to make money, and if we can help them, then great. So I think that really comes down to it. If you're going in homes and you guys are in the real estate business and you want to buy more houses and work with people, really working on your people skills and developing rapport and making them feel comfortable, and realizing that you're not putting them under any pressure. You're giving them an option. If it's the right option, then we'll move forward and continue to get their approval on each step of the way. I think that's the direction that you need to go and start learning more about that. There's some phenomenal resources about sales training. One of the books that I read that I absolutely love is called Never Split the Difference. So if any of you haven't read that, that's a great place to start when it comes down to sales and negotiation with people. So there's a previous FBI hostage negotiator that talks about sales. So really a cool book that's helped me a lot.
And Bill, you said obviously your goal in initially talking to these individuals is to really find out what their motivations and I guess pain points are for wanting to sell the house. What do you have kind of the top maybe 2 or 3 things typically that a lot of people you talk to are dealing with that ends up being their motivator?
Yeah, absolutely. So a lot of times it's we deal with a lot of absentee landlords, so people that live out of state that have been renting their house out for a long time and just are fed up and frustrated. So constantly needs repairs. They're evicting people. They're not paying rent. They're just tired of dealing with it. So that's probably our number one seller is the absentee landlord. So really to get down to that is just, hey, why are you not making the returns that you need? Well, why would you consider selling it? It sounds like you're renting this thing out for a lot of money. It sounds great. What's wrong? And then they just start sharing a lot of their pain of, tenants not paying. They have to track people down. There's not good property management in the area. Constantly needs repairs. They're going to have to replace things in the future. All of these things. That's one of them. And when we're dealing with kind of the owner occupied, usually they say that it's downsizing. So they want to downsize. So it's usually a little bit older generation that wants to downsize, but usually that's just a surface problem. It's something else that's going on that they're not looking to use a realtor. So a lot of times it's a sick family member, or they want to go help their kids and their grandkids. They want to move. So really when you build the rapport, you actually get out of that surface level problem that you hear, and you can really dig into what's really going on, because you've got to get to that point with them in order for them to open up and feel comfortable with you. And when you can get to that point, and this goes for anything, everybody, not just houses, it's sales in general, is when you can get to the true meaning of why somebody's sitting down and sharing with you and really find out what they need and what they want, then you can make an agreement that they feel comfortable with, that moving forward. That's the key. So we talked about kind of downsizing. Usually it's sick, medical bills, and then a lot of times it's financial struggles. This is the only thing that they have. Maybe it's been inherited. Maybe something else is going on, but it's just they got financial problems, whether they're about to go bankrupt, or they have past due medical bills or credit cards or student loans or things like that just weighing on them, and they just want to move on from the house, and it's the only thing that they have. So finding out through all of those, getting to the real meat of the problem is the key.
Okay. And Bill, do you mind sharing? Somebody asked if you could share the name of that book again that you mentioned a minute ago regarding negotiation with the former hostage negotiator.
Oh
Um,
yeah, yeah. It's called Never Split the Difference. Chris Voss is his name, the author. CHRISVOSS. Chris Voss. Never Split the Difference.
okay.
Yep.
So again, so we covered how you're finding properties, and obviously you're negotiating the purchase of a property. And I'm sure there's times when you walk away from deals after maybe finding out some of the underlying reasons. But so if you've purchased a property, you get to the point now. What are you going to do with it? Are you going to wholesale? Are you going to flip it? Wholesale, which I'm curious to hear. I have not heard that term before, what that is, or whether you can do it as a rental. Kind of, how you decide between some of these options, and maybe when you decide. Are you when you look at a property before you even buy it? Are you already knowing what the exit strategy is, or do you get into the project and then as you get into it determine what you want to do? Maybe I guess yes, share how you analyze the property from and work in your exit strategy.
Sure. So let me start with do we already know before we go into the deal? Not usually, but we will want to analyze it depending on what it is. So there's clear rental properties. There's clear areas that we work in that is just very heavy landlord. It's mostly rentals, and so a flip doesn't really make a lot of sense in those zip codes and areas and neighborhoods. So when we analyze the property, we definitely will run the numbers differently if it's going to be. We think that it'll be a flip versus a rental property. Um, so so from there, once we get the house under contract, we typically know what what most people would do with it. And I've been surprised in the past. I'll have somebody pay way more than I thought that they would, and they're either going to live there or they have a family member that they're going to move into it or something like that. We've even had some guys that flip houses that just need to keep their crews busy. They actually don't need to make a lot of money on it. So so what I see is for us, the way that we decide is we get to contract and then we analyze what the numbers look like. What do we have going on right now? So a big reason why we might wholesale one of these, which just means to assign the contract to an end buyer, whether it's a flipper or a landlord, and is that we have too many flips going on. Our capital position might not be great. We have too many projects going on, not enough manpower, and we decide to wholesale it instead of flip it ourselves. Nothing wrong with the house, nothing wrong with anything. We just that's where we're at, and I don't want to take on too many projects and get overloaded with my crew. So and then a wholesale. So that's kind of what we do is we might just buy it and then just slap it up on the MLS, clean it out a little bit, and put it on the MLS without doing any work. Usually that's a property that can get a loan on it. But maybe somebody wants to move in. It doesn't need a ton of work. It's just really dated. We're not going to do a $30,000 to $50,000 rehab on it. We're just going to buy it and put it back up on the MLS. So that's what we kind of call we'll wholesale it, like a mix between a wholesale and a retail, where we'll find the money, we'll purchase it, and then just list it and sell it. And usually the way that we do it is we just look and see what we project that we can make on all these. So if I can make $50,000 flipping it or $25,000 wholesaling it, then we just kind of run those numbers and look and see what does the business need right now. Does the business need an injection of capital today or tomorrow or next week, or can we wait 3 or 4 months to get that $50,000 out of the flip? In today's market, I mean, we started, even the title here on this slide is finding deals in a competitive market. So we want to squeeze all the juice that we have out of every deal that we get right now. It's really expensive for us to find properties. And to get these houses under contract, you're going to make sure as a business owner that I can maximize the profit on them. So that's kind of how we run it. Rentals. So I don't keep a lot of rentals anymore. I used to. I've kind of moved into some bigger investments, some syndication, stuff like that with some of my money. And for me, the rental properties were, a little bit time intensive for me. So that's kind of why I moved out of that space. But now with all these opportunity zone funds starting and things like that I'm looking at with my IRA, it may be something that we ramp up here in the next year or so. But we just analyze it and look and see what those exit strategies might be. What kind of return are we going to get? I'll tell you what we are looking at right now is these vacation rentals. So we are buying some of these properties that we could fix up and turn into vacation rentals because they're producing incredible cash flow right now. And so I just bought one down in Pensacola, Florida. It's doing fantastic the first month. So I think that'll be something that we really run the numbers on and look at closer as we move forward.
No, and as you mentioned, Bill, I mean, this exit strategies, it can be an evolving um, thing that's going on. You say the vacation rental, the VRBOs and Airbnbs weren't around 5 years ago for the most part, or it
Yep.
was a much different industry. So it's keeping abreast kind of the different trends in real estate for the average investor. So some people have their bread and butter they just want to stick to, and that's it. But really maximize the return, it's a matter of seeing what other options that certainly are presenting themselves.
Yeah, absolutely. I mean, just to give an example, I bought this vacation rental for a little over $600,000 with a mortgage down in Pensacola, and this month it'll bring in $13,000. So it's really incredible what can be done, and that's a house that there's no way that it could be a month-to-month rental. I would lose money on the mortgage.
Right.
So it's just opening up doors. And the other thing to understand when we talk about exit strategies, if you're just purely a wholesaler, you need to understand how to run those numbers and market that contract as a vacation rental and present those numbers to those investors and know what you could potentially have. Because when you go into these homes and you figure out how to run your numbers, if my company is running it as a vacation rental and showing and have those investors that are going to be buying this contract on the back end, we can pay a lot more than you if you don't know how to go in and run your numbers that way. So really understanding the exit strategies is not just for the person who's doing this, like who's a flipper or a landlord, but it's really for the wholesaler too, because you got to know what they're going to want to pay for this, so you can determine what your offer has to be. So
Yep, and we had another question pop up. I think it's more directed at me. If you're talking about a rehab, if you're and question is, can I work on the property myself if I'm buying a rehab inside of an IRA account? The answer is you cannot. That's one of the restrictions if your IRA is investing in real estate. It has to be on a completely passive basis. You cannot actively be doing the work on the property, whether you're putting in a whole new kitchen or simply just putting in new carpet and paint. The IRS does require that you hire a third party, somebody unrelated to you, to do that work. So that's kind of just a know that going in. If you're buying a rehab in an IRA account, you're going to need to factor in labor costs for hiring a third party to do that actual work. So get that question
yeah,
answered.
so one thing for me, I'm an engineer, and I gotta, if I know why, I kind of know, I'll remember it. So for me, it's, if you think of it, it's a contribution to your IRA, right? That's the way I look at it. So I'm
Yep.
contributing the work and not getting paid for it. So that's kind of the way that I kind of remember what I can and can't do. If I'm actually contributing to the IRA with my time, then it's basically like overfunding my IRA. So
It
that's
is
kind of how I
exactly.
remember that stuff.
Yeah, that's the rule. I mean, if you were to if you were to have your IRA pay you, that's a prohibited transaction. Your IRA cannot pay you
Yep.
as a disqualified person. But if you do it free, you're contributing your own labor, and the IRS requirements or that any contributions to an IRA have to be made in cash. So, and as you
Yep.
said, you could then if they did allow contributions of labor, people could, how much is your time worth for somebody else's, and now you have the over contribution issue that
Yep.
pops up there. So yeah, definitely answer that. So again, when we're talking about this, we started at the very beginning, Bill, and getting a little bit on your story. A lot of this was you wanting to prioritize your time, getting involved in this business, but also having to kind of where this doesn't become an anchor for you that keeps you from doing the things that you want to do. So kind of what things do you do that, either systems you put in place or other things that you can automate that allow you to really prioritize your most important resource. In this business, there's so many different facets of what goes on, and I'm sure there's some things that you're better at than others that you'd rather focus. If you're going to do anything, focus your time on those things where you can really make the impact and allow other people or other systems to do the other little day-to-day activities. So maybe cover a little bit on how you maximize your time, either whether it's just to spend time with your family or work on a certain part of the business.
Yeah, I love that you say that, like knowing what you're good at and what you're not good at, because that's really important to understand, especially as you're going to start growing and trying to scale a business, or even if it's just going to be you, knowing what to hire out and what to do yourself. Um, so that was like step one for me, is to really figure out who I am and what I'm good at. And once I really understand myself really well right now, better than I think I ever have before, and knowing what I can and can't do. So for me, the big thing for me was systems and automation. I mentioned earlier I'm an engineer by schooling and a pilot, right, for the last 17 years. So very checklist oriented, systems, process, button pushing. I was even a test pilot for the Navy, so it was very like step by step by the book type stuff. So I'm really good at figuring out how to reduce my time and workload and bring in some automations and systems. So the first thing that I did when I got going was just write down everything that I was doing, everything, like going to Home Depot to pick out paint, like choose the paint, go buy the paint, actually paint the walls, put a lockbox on a house, turn on utilities, make an offer on the MLS, bid on this house on the county auctions, research the house on the county auctions. So it made a huge list. And I just kind of looked at that list and said, what am I doing and what can I have somebody else do? And then how much is it going to cost for somebody else to do it? Then the other thing that I did was just make a list of how much I went back to last year and said, how much money did I make the last year? And then approximately how much did I work last year in hours? And I took the total and I divided by the number of hours, and that gave me a number. And that's my dollar per hour for the last year. And so I looked at that number and I looked at that list and I said, who can I hire for less than that number to go do this stuff? And that was the last time that I cut my grass, because for about $25, I could pay somebody to cut my grass for an hour. That it was taking me to do it in the hot heat in the panhandle of Florida, when I could be playing with my kids and hanging out with my family or getting something accomplished. So things like that. I think we're going to talk about kind of hiring a team and things, but that's, the human capital, the time that you put in is really important. So some of those things that I was doing, I could automate with systems. So there's apps, there's different, there's lots of different resources that you have in the real estate business, and any business, frankly, that can help you reduce your time. So I used a phone system. So I had, lots of different kind of pieces and mailers going out, and they were all calling one phone number. So I had no idea what was working and what wasn't working unless I asked the people, and they go, I don't know, I think I got a card or I saw something somewhere. So I brought in a phone system, and the phone system allowed me to have different phone numbers for different marketing material. So I knew how many calls I got that week were from what I was paying to do in that marketing channel. And then from there, I got a CRM, so customer resource management system. So what it is when a call came in, it automatically created a lead in this database. Before that, I was having a piece of paper and a pen, and I was writing a bunch of stuff down. I was talking to them, and I just had a bunch of stacks of paper on my desk. Well, if your stack of paper is at the bottom and more stacks start going on top, then I'm never going to get back to the bottom of that paperwork. And so I wasn't following up with people that I should have been, and there was no automation. Now, if I want to put somebody on a sequence of automation, it'll email them, text message them, send them a voicemail. I can do lots of things to follow up with the potential future clients. And so keeping organized like that, I can also build in tasks for myself. So if I need to do a task, I can, like a reminder to call somebody in 3 days, and I can just set a task for that. I go into the CRM, it pops it up. It'll even send me an email or a text message saying, hey, don't forget to call this person at this time. So that CRM was really powerful for me as I got bigger and grew. And we have mail services, like email services for our buyers list to send out emails. We have a text service for our buyers that, we'll send out for marketing a contract for sale. We'll text blast everybody, and they can see it and take a look at it and determine if it's something that they're interested in or not. And all that stuff is saving time, time for me. And we even have buttons that we press inside the CRM now that will generate a contract or generate an email to the whole team to say, hey, we just got this house under contract. Next step is get the contract signed and send it over to title and open escrow. So lots of this automation to reduce workload. So now all I care about is how I keep my team doing what they do, that one thing that they do and they do really well, and keep them on task so they're really, really good at it. And a lot of the systems and resources can help you do that. So that's kind of the big thing that I think as we got bigger and bigger over time, and getting to do 15, 20 deals a month, I found I really need to have that. Otherwise, you can only handle 1 or 2 a month.
Sure, and I guess I had just about to ask the same question. We had somebody else just type it in as well. Do you mind sharing kind of what CRM you use that maybe that's worked the best for you, especially in the real estate industry?
Yeah, so I use a CRM called Podio. So Podio is the main CRM that we use, and it can be customized. You can hire somebody to customize it. You can customize it yourself. And I use a third-party provider personally that does the customization automation for us. It's called Investor Fuse, Fuse, Investor Fuse. So we pay a monthly fee, and it's like a wrap inside Podio. It's like this kind of CRM in a box that they give you, and you just kind of set up the automations and things like that.
Is that
We
Podio is
also use
Podio?
Podio, yeah.
Okay.
And yeah, if you just went to Podio and got a free service from them, it can be overwhelming. Even for me as an engineer, I went in there and I tried to set it up myself, and it just wasn't for me. It can be very very challenging and difficult. There's a couple other ones that I've used in the past. So if you're just getting started, there's a good one called Pipe Drive. So I really like that one. It's very simple and clean. But if you're really trying to grow and scale to kind of like the level that we're at, you'll outgrow it really fast. It's good to just kind of move tiles back and forth and things like that. So those are kind of some that I've used. I've used some other ones like Salesforce and Close.io for some sales companies that I have. But I think Podio, I really do like the Podio with Investor Fuse combo. It's a good CRM with automation built in. I tell you what, my favorite thing about it is that when someone calls in, it automatically creates a lead in the database. Like that was it for me. When someone showed me that they could do that, and then if you don't answer it, it'll automatically send them a text message and say, hey, I'm sorry, I'm not available right now, but I'll get back to you as soon as I can. Is there a house that you have to sell? And then when they respond, it just goes right into the lead. It was a game changer for me. I mean, we were having to compare the phone calls in CallRail. So the phone system I use is called CallRail, RAIL, CallRail, and we were comparing it in there to what we had on the inside of our CRM all the time. So it's just so much manual labor. Now it's just automatically getting dropped in there. It's great.
All right, Bill, kind of the last portion we wanted to talk about here, make sure we have enough time as well. And one of the questions came in, you might be able to factor some of this in there too as well. Someone asking, do you invest money from other IRAs, basically people who have capital but not the knowledge? I know that you said up front that you definitely do that. And obviously that person those investors become in a sense part of your team. But in talking specifically about what you do on a day-to-day basis with the rehabs or wholesaling, as you mentioned, if you try to do it all yourself, you're only going to get so far. But really, to kind of level up and really start getting some better returns, it's a matter of building that team and finding people that you can trust. How do you kind of determine not only which duties you're looking to outsource, but then when you're finding the right team members, how do you identify them? And I guess maybe just give us some thoughts there as well. And maybe some team members that you think are really the crucial beginning stages for somebody who's looking to build out that type of relationship and that type of team to have to help with their business.
Yeah. Yeah, with the team, I think step one is what we talked about earlier. It's what's kind of your superpower. So knowing yourself and what you're good at and what you're not good at in the beginning, and what you have time for and don't have time for. So my first hire was an office manager slash lead manager. So she's answering the phones and also handling some of our rehab properties, like turning on utilities and putting on lock boxes and coordinating some of the day-to-day stuff, and also helping with the CRM and building that out. So more of an administrative task, because I was still flying every day. I was working full time when I started this business. And the first 2 years that I was running it, I was flying, 50, 60 hours a week, every week. So I knew that if we're going to spend all this money on marketing, I got to have somebody answering the phone live. So we cannot let those people go to voicemail, because what happens when you call a plumber and nobody answers and you get a recording. You're just going to call the next plumber until you get somebody, because it's urgent and you need them out there right away. So whoever answers the phone is probably getting the job. And I really felt like this is the same kind of business as that. They're not going to leave us a message. And we're going to have trouble getting them back on the phone. So I knew that was going to be a really important task, and I couldn't do it. So someone else who may have had more time, but maybe wasn't so good going in the house and negotiating and talking to people and sales, maybe they would do something else. Maybe they would hire a salesperson first, and somebody who's not very good with details and things like that might hire something else out. Somebody who's really handy and wants to flip houses and they want to work on the houses and they love that part of it, then they might hire something different out than somebody who has no idea how to change a light bulb. So I think that's the start. That's step one, is to figure out in the beginning when you're small, what is the thing that you need help with that you're not good at, and I would outsource that first. Now, if it's like a really high paying task, that's different. But sometimes as business owners, we just have to do the things that we don't like to do, and we have to get good at them. So I'll tell you that right now, if you want to be successful. But so what I did that. I did exactly what I talked about earlier. I wrote down my dollar per hour. I wrote down those tasks, and I said, man, I could probably give. And so I knew I needed to hire somebody administrative to answer the phone. And then what I did was I went down that task list and said they could also do this and this and this and this, and take like half of the things off. So I attribute it to kind of like a cup of water, right? So you fill up a cup of water with things that are going on, time and all this work that you have, and your cup starts kind of overflowing with water, right? So if you bring somebody else in and you empty kind of half of your cup into their cup, and now you guys are doing okay together. You're not overloaded, you're not past saturated, and your cup starts filling up with other things. You start doing the things that you weren't doing before, because now you have the capacity to do it. And then you really have to keep track of who you hire in your team, and make sure that their cups aren't overflowing all the time, and they're redlining. I call it a lot, like, hey, somebody's really redlining. They're working too hard, they're overloaded, they're not getting to the things that they need to get to. You need to bring in somebody else to help them. So usually, can organically start growing that team the right way. So the duties to outsource, I think, come from that kind of, what are you good at? What's that list of things that you're doing? What shouldn't you be doing as a business owner? You should not be cutting grass. You should not be putting on lock boxes. You should not be turning on utilities. Can I get somebody for $10 an hour to do that stuff? Because my dollar per hour was around $55 when I started my business. So I want to get that up, and more tasks that I can delegate, the less time that I work, the more money that we can make, the higher our dollar per hour goes. And then we start hiring out bigger things, like, doing the marketing and negotiating the contracts and selling the contracts, and to the point where eventually you can kind of hire yourself out of that job. You're not trying to create a job. I wasn't trying to create a job for myself. I was trying to create a business that could run without me if I wanted it to. So how to identify the right team? I think you asked that. So that's, I'd say that's probably longer than a 5-minute conversation, but I
Okay.
think step one is really about knowing who you are and kind of what your core values are, and the person you are and who you want to work with. And I would recommend working with somebody that exhibits your core values and is right for you and your team, before somebody who is just qualified for the job and doesn't have the same values as you. So my core values are ownership, stewardship, hardworking, integrity, and personal professional development. So if somebody doesn't exude all 5 of those core values, they're not even going to be considered for the position. So they have to take ownership of what they do. They have to be a good steward of the company resources and the community. They have to be hardworking. They have to have integrity through and through, and they have to be working on themselves all the time, personally and professionally. So what's the last book that you read? So we tailor our questions and interviews around this stuff. Like, tell me a time where you had to walk away from something because of ethics, or something that happened that it didn't align with your values. Tell me about the last book that you read. What kind of podcasts are you listening to? Do you attend webinars like this? Like, what are you putting in your body? And if they say, I watch, like, I don't know, HBO specials all night, or something like that, then it's not the right fit. If they come on and say, I just read the book Never Split the Difference, and I want to train more on sales and negotiation, they're coming in for a sales position, then we're going to keep talking. So
Okay, yeah, Bill,
I think
thanks.
that's
That's
step
okay.
one.
Like I said, you said maybe it's something you could take a little bit longer. We can, maybe for a different day. But I did want to make sure we wrap up here in a few minutes. But wanted to cover a couple other things. We've had a couple questions specifically on, and I know one of the things that maybe you specialize in doing, one of your strengths that you work on, is really raising capital. And somebody asked, obviously, do you invest money from other IRAs? And then somebody asked, followed up and said, give an example maybe of using other people's money, especially IRA, and how it's distributed back to them. Question said, do all investors have to have one specific IRA company? Obviously we love to work with people and work with, all of someone's investors, but no, not all investors have to have the same IRA company, but there might be some advantages to doing that. So maybe kind of wrap up talking a little bit
Okay.
raising capital, how you do it, and if you're using people's IRA funds, how you have that discussion and work with them.
Yeah, well, we use a lot of IRA funds in my business to flip, and we're doing a storage unit, a new construction down in Florida right now that's got a lot of family and friends kind of IRA money in it. So the, do I invest other people's IRA money? Absolutely. But the biggest thing for me is I work with people that I know. Like if I get to know them, everybody that invests with me in my company is a friend, a longtime friend, or a family member. Things like that. If my advice to anybody that's on this call that's thinking about investing in the IRA that doesn't have the knowledge and information and access to deals and all that things, and you just want to be passive and get a return, because look, I'm that way too. I invest in other people's syndications with my IRA. I can't invest in my business with my IRA, so I lend my IRA out a lot, and my IRA and all my 401ks, just like you guys are asking about right here. So what I look for, the number one thing that I look for when I'm loaning people money is how well do I know you, how much do I like you, and how much do I trust you? Because I'll tell you what, return of capital is way more important than return on investment. So I want to make sure that I get my principal back as well as my interest back. And you've got to be really careful with who you work with. So get to know those people. Find the people who are doing things with high integrity at a high level that are trustworthy, and also be able to, because you got to underwrite the person. I underwrite the person before I underwrite the deal. If it's somebody that I'm not sure about and they're coming to me to ask me for my money, it's usually, I don't know. I'm usually a little bit like, what's going on? We don't have a relationship. Why is that happening? There's obviously some other things with accredited and non-accredited investors that I'm sure that Scott, you guys talk about that a lot. But for me, it's more about I underwrite the person. So for me, we are always raising money for different deals that we're doing and things like that. But it's got to be the right fit. And as far as like me going out and raising money, what I do is, I talk to people that I usually get referrals from lenders that I have right now, people that really love the kind of return that they're getting. My dad will go to he'll be sitting around at a poker game and talking to some of his friends and just talking about what we're doing and say, yeah, you should reach out to my son, or, my cousin or some of my other friends. It becomes this, when you're making good returns, you want to talk about it. So for me, I just do a consultation, just like I talked about in home when you're working with sellers is, look, where's your money right now? What do you want to do with it? What are you doing with it now? What kind of returns are you making? What kind of returns are you looking for? Is it a good fit or not? And that's just the conversation that I have with people. I want to be almost like an advisor for them in a consultation to say, this is what we can do. This is what we provide. This is what we've done in the past for other people. And we can do we can work together if it fits for you. And so I tell you, if you go in with that kind of attitude where you don't need the money, you're telling them what kind of returns that they can make and how great that their life can be, you're solving that same problem. We talked about the problems with the house. Investors have problems of, I want to make good returns with my money. I also want it to be secure. I want it to be consistent. I want all of those things. If some people come to me and say, I'm tired of the up and down of the stock market. I say, well, how about a consistent return? Like a fixed return? Would you like that? Yes, I would like that. I would like to know that in 3 years, I know the kind of return that would be fixed on this mortgage or this note. So I'm going to answer the next question because I know we're getting short. So can you talk through an example using other people's money, specifically IRA money, and how it's distributed back to them? So I'll use an example right now of a project that we're doing down in Florida. So we have an IRA investors that are coming in and they're making a fixed return on this property, and they're secured to the LLC that's created the project, and they're getting paid quarterly. So quarterly money goes back to their IRA. So if they have an IRA custodian like Advanta, then we make the check out to the IRA custodian and it goes back to them. If we have I have a checkbook IRA. So when I invest in deals like this, then they send me a check and I deposit it in the bank with my checkbook LLC. So the other thing that we've done in my business is I have an IRA investor that whenever we buy a house, he loans the purchase price and the rehab funds. And then what we do is we do the whole project on a balloon note. at a fixed interest rate. And then at the end of the project, when it sells, he gets a wire back with all of his principal plus the interest that accumulated over that time. And it goes back to his IRA custodian. Just the IRA custodian approves of the transaction up front, it funds, and then when we're finished, we sell. The attorney or the title company wires the money right back to the IRA company. So his money never hits our bank account, never gets sent to me. It goes straight to the title company and straight back from the title company. So that's kind of how we do business in kind of the multifamily storage space, and then also in my single family houses. Same thing with me. When I invest in somebody else's syndication, I wire the money over to them from my 401k. We get a regular dividend check, and that's it. And then at the end of the project, when they sell, they pay off the loan.
Yeah, well, Bill, I appreciate it. We're kind of getting up here on the end
Yeah.
of the time here. I wanted to give you just a minute as well. I want to appreciate, obviously, you coming on board, sharing your knowledge today, and really give people the behind the scenes thing. We do a lot of presentations where we talk about, how to use your IRA, what the transaction looks like, but hearing the other side of what's going on is, I think, very important for the investors. I just put Bill's web address up again in the chat. It's www.blackjackre.com for you to reach out to him. But Bill, I also know you have an event coming up in October. I don't know if you want to just you could quickly plug that as well, if people are looking to
Yeah.
meet you and learn more information.
Yeah, I run a mastermind group called Seven Figure Flipping, and what we have in October is an event called Flip Hacking Live, and maybe I'll write it in there too. It's a flip FLIP, like flipping houses, hacking like hacking the pros and what they do live.com. So fliphackinglive.com. It's October 10th through the 12th in San Diego. We put speakers on stage, about 20 speakers doing, like about $500,000 or more in their business. Most of them are running seven-figure businesses, $1 million or more house flipping and wholesaling businesses. And we put them on stage to just kind of share their secrets and what they're doing. And we have a couple keynote speakers this year. One of them is Jocko Willink. He's a Navy SEAL that wrote a book called Extreme Ownership. And that's kind of like the book that I'm using right now to run and manage and lead my team in my company. It's been an incredible book for us. I'm really excited to kind of see him in person. So if I'd love to see you guys if you come out there. I'm the MC of the event, running the event. If you come and you were on here, just come shake my hand and let me know. And I'm hoping to get Scott out there. So him and I.
And I'm working on it. So hopefully I'll see you then. Obviously anyone who comes as well. So Bill, again, thank you very much for your time today, sharing this the information. And so again, if you want to reach out to Bill, the websites, we put them up there on in the chat box. You can certainly reach out to me here at Advant. I can put you in touch with Bill if you need his information as well. So again, thanks everybody for attending today. Bill, again, thank you very much for your time.
Yeah, thanks for having me, Scott. See you guys later.
All right, thanks. Bye-bye.
Bye.